disclosure, I am re-recording this this market view commentary on Wednesday morning since the Monday night session did not record. For that reason, I'm going to do the best I can to recreate the conversation I had Monday night with everyone. I do hope this can get out as quickly as possible so that you have access to it. I do apologize for it being late. With that said, I do want to thank Lance and his wife who are willing to wake up early with me this morning to go through this, as well as David W., who also has chosen to go through this with me since they both, well, I guess Lance's wife missed Monday evening and David W. was also not there. So, gentlemen and ma'am, appreciate having you here with me today. Let's go through this as relatively quickly. The market recap of last week. The indexes were down 1.3% prior to the week's close. So plain and simple, we had another bad week last week, but most importantly, what we're trying to focus on are we have 26 million unemployed people in our economy right now. That's huge. In fact, you're going to hear pretty quickly that we're going to approach the same amount of unemployment that we had in the Great Depression. Of course, our population total is significantly higher. And as a percentage basis, we probably do not have the same percentage of unemployed people. But yes, we will have just as many unemployed people as we had in the Great Depression back in the late 20s, early 30s. But that does not percentage-wise match up. But we had 26,000 claim, 26 million. I wish it's 26,000. Obviously, our market was down last week. It was only the energy sector that was nearly up 2%. Everything else was down. We've talked in the past about having technology and financials lead us out of this COVID-19 recession of kinds. With that said, the financial sector was one of the worst, pressured by insurance losses, and technology was also down 1%. So we didn't receive any help from our financials or our technology companies last week. Even the FANG stocks, they were all down pretty good on the thought process that, hey, people aren't buying as much online, so Facebook's going to be hurt. Apple's not going to have as much iPhone, so they're going to be hurt. There was just no positivity in our technology whatsoever last week. Now, something for me that was positive, at least it better become positive. I met with a gal who gave me a Vanguard experience on Monday. She's looking at possibly moving some money over because she got hit. She does not have any protection. In fact, in all honesty, in no way, shape, or form is diversification protection. It's just diversifying and spreading your money out. For the most part, you're probably going to have a lot of winners, but you also have to mix in a lot of losers. I remember Warren Buffett at one time saying, hey, diversification is for those that don't know how to invest. They don't know how to work the numbers. They don't know how to check and see for those companies that should do relatively well. Doesn't mean that they all do well. Doesn't mean that they all work on everyone's timetable. But diversification is just, I'm just going to say it, it's the stupid man's way of thinking they're going to protect each other. So she was in the Vanguard mid-cap ETF. And in all honesty, mid-caps, the Russell, it's outpaced the S&P 500. So as we were going through her portfolio, I was shocked at the amount of investment she had in the Vanguard mid-cap ETF. And in all honesty, I went to Morningstar, and of course it's 5-star rated. And then to take it a little bit farther, hey, it doesn't quite have the dividend yield as the S&P 500, but Kevin, I was told this thing is cheap. And this thing matches the S&P 500 actually My rep lets me know that it beats it consistently. Kevin, look, the adjusted expense ratio is 0.04. So she has 4/100ths of a percent charge, so to speak, in this particular ETF. In fact, Kevin, it's an ETF. It's not even a fund like you say or worry about. So I think I'm okay. We ended up giving a call out to her rep for Vanguard. And boy, I'm just going to tell you, I was shocked. Obviously, Morningstar was brought up to me. And one of the funny things is really quickly, they bring up the performance. And he's quick to state that, hey, this performance, as I'm getting my notes here, this performance mimics the S&P 500. And if you take a look at it, it definitely mimics the S&P 500. It's today it's at 28,944. The index is 28,643, so it beats it by 214 basis points. And as you look over it year over year, you know, boom, it moves all over the place. Almost right on top of the index. You can't even see a discrepancy. And I'm going to go through some of the total fund returns here in just a bit. But the rep said everything right. I mean, really, he said everything right. He brought up and went through Morningstar's on the risk. Hey, you know, the beta is a little bit higher than the S&P 500. The price, I mean, expense ratio again, really hit on it. Went through the portfolio and what's in it. We were just told everything where this gal said, you see, Kevin, I think I'm doing pretty well. So with that said, I very politely said, okay, let's go to Vanguard's site. And the first thing that we need to do is take a look what they say. And before I knew it, it's a more aggressive fund. In fact, the same ETF has a bigger following or bigger investment through a mutual fund, Admiral shares. Now, if you hear mutual fund, the first thing you need to realize is, oh crap, there are a ton of hidden charges in here. Not only that, it has a cuspid number, which means plain and simple, it also has its own EIN number, which means the fund in some way, shape, or form is going to pay its own taxes, yet she will also have to pay taxes on gains if she's in a 401k, you know, a non-taxable account is what I'm going to say. So plain and simple, I said, you know what? Let's find the nuts and bolts. Let's go to the prospectus. Let's find out if this guy is saying what is true or if she's been lied to. So right out of the gate, we pull up the prospectus. I pull up the summary prospectus, and I've got a copy here behind you that you can't see. But I wanted to see, because I'm not a Vanguard fund, I'll be honest with you. In fact, they're one of my least favorite. I wanted to see if there was this ETF, since it's an ETF, it's low cost, if it was correct in saying it's low cost, protecting your money through diversification, and if this Yahoo had any clue on what the hell he was saying. You can see the tone of my voice is changing. We all know these guys are bullshitters. They're bullshit artists. And it blew me away as we very quickly started to go through here. The first thing that he points out to me is that, hey, any representation to the contrary is a criminal offense. So understand, and he tried to say, you know, this was approved by the SEC. Well, actually, it says it's not approved. They're just saying, don't lie. and be as honest as you can in the prospectus. So as we went through this, I had to point out, hey, it's not approved by the SEC, but let's take a look at something. On page 2, right out of the gate, they let you know there are fees and expenses you may pay in addition to buying or holding this ETF or the fund. These fees are paid directly from your investment before it goes in. There are transaction fees on purchases and sales. Well, they're none through Vanguard. Well, with all due respect, I'm licensed, bond insured. I've got my 6 and my 7. I can receive fees for putting people into this. There's some purchase and sales fees. Sales is the key word there, where I pick up 1% just by putting you into it. And then we get 1% of the brokerage house or the trading firm gets 1%, and I'll get 0.25% each year thereafter. There's transaction fees on reinvesting dividends. As I took a peek, I was under the impression, foolish me, that the transaction fees would be, like $5, what it is for buying options, or maybe free for stock ownership. No, reinvesting dividends is a $50 ticket fee. I just about crap myself. As I look through her portfolio, hey, about 8 times a year, you're going to pay $50 to reinvest your dividends. And one of those dividends was $3.34. We're going to charge you $50 to reinvest $3.34 freaking cents into a share, a portion of a share. You guys want to find out if you're really in a fund or not? You want to test your money manager? Go ahead and look and see if you have 34.8 shares, 34.55 shares, 24.62 shares. Anytime you have a point of a share, guess what? You're in a fund. You can't buy 1/4 of a share, 1/3 of a share, 0.62 shares on a brokerage firm. Now, if you own a fund, you can segregate some out, and over the big masses, you can own point something shares. So if you want to find out if you're in a fund and getting raped on fees and hidden charges, look to see if you've got a point something on a share count. If your share counts show any portion of a share as a percentage, or excuse me, the decimal point basis, you're in a fund. I couldn't believe they would charge her $50 to reinvest $3.34 freaking cents. It's ridiculous. I didn't notice any transaction fee on a conversion to ETF shares, but that's moving something from the fund, the mutual fund, into an ETF. And short answer is, for all intents and purposes, this added at least, and I'm going on the low side here, 0.25, 1/4% more cost basis to her 0.04. So now we're at a 0.29, and with all due respect, that's not too bad. That's not too bad. We go to the next page, and all of a sudden, she realized things are a little bit different. Well, the total annual operating expenses are 0.04. But we just went through and showed that, yeah, by the way, she's actually getting an extra 0. Roughly on the low side, to 5%, 1/4% in some fees. Oh, and by the way, there's another 1% in a sales transaction. It's a commission to me. So all of a sudden her 0.4 is really a 1.29. So not bad, but much different than what was suggested here. As we continue to go through here, I know I've got this guy squirming on the other end of the phone, right? Hey, by the way, the fund is going to pay additional transaction costs, such as commissions when it buys and sells securities. It's called the turnover in its portfolio. I had to giggle. I had to giggle because, in all honesty, you're thinking to yourself, well, yeah, of course, duh, right? Of course, there are going to be some fees. Of course, it's going to have a portfolio turnover. It's what it does. Now, let me just check one thing really quickly. All right, perfect. So, as we went through here very quickly, I'm on the wrong page. There we go. Very quickly, we went through and I said, hold on, let's show her something. These costs are not reflected in the operating expenses. And she asked, well, Kevin, what does the turnover mean? Well, it's pretty simple. And I was brutal at this point. Hey, 15% of the value of their portfolio, at the end of every year, they sell off their losers, they put in winners. That helps their portfolio look better at the end of the year when they say, hey, we have all of these winners. Doesn't mean they had them for the whole year, but 15% of their portfolios turned over. And those commissions and fees, in all honesty, came out to be about another little over 1%. It was 1 point something, but I'm trying to go through the low side here. So in all honesty, it was another 1%. It was probably closer to 1.5 because it's 15%. But all I could come up with was another 1.8 is the most I could come up with. So all of a sudden, total now, she's looking at a 2.37 fee on her account. I let her know, it's part of the game. Part of the game is you sell off your losers, so you get the losers, but it adjusts their funds for winners on assets at the end of a year. They sell off the losers. You still take those losses in your account, and you're toast. You're screwed. Now, at this point, the guy jumps in and says, well, that's not true. And I said, well, with all due respect, we're going to find out, because when we go to page 4 on this portfolio that mimics the S&P, no sooner did we go here, I said, let's just check the first year. And I didn't have 2018 or 19. I don't know what we were doing. In fact, we were probably going off an older one. It had 2018 and it had 2017. And so the first year that I had, we just pulled it up, and the S&P was a 21.83. They had missed the S&P by 2 0.61%. And I could have went farther along, but that's all I needed to see. That's all I needed to see, and it was really, I mean, it was shocking. Because now she's like heckling, yeah, I missed it by like 5%. Oh, don't forget that there's some taxes involved. Well, tax situation may differ, you know. No. It has an EIN number. It has distributions. It does a great job of paying long-term capital gains, but on their 5-year average of 9.26, after distributions and sales of funds, the real gain was 7.22. Now you start adding all this together, and she's going, well, Kevin, you know, that's like 4.40 is the real charge. Yes, and if you're not in a tax deferred account, if you're not in that tax deferred account, you're going to pay taxes again on it. The fund pays its taxes as a corporation, but yes, you're going to pay taxes again in your personal account if it's not a tax deferred. Well, with all due respect, no, she doesn't have to pay any taxes if it's a 401k. Again, that is not true. That's true for her, but the fund pays taxes. The fund isn't tax-free. It has its own EIN number. In fact, it has distribution charges and taxes that are up to 2% of the value of the fund. So if we did this math, it comes out to 4.40. It's not 0.04 as the charge. In fact, in all honesty, it is 1,000 times more expensive. And the worst part about it, over a 10, 12-year period, with all honesty, 50% of her portfolio was taken out in fees over that 12-year period. And she thought it wasn't even 0.5%. 4.40 times 12 comes into that 48, 50% range, right? She was shocked. And guess who's going to pick up a new client? When I sat there and said, with all due respect, for the last 12 years, you've been lied to. For the last 12 years, the real fees are significantly different than what you were led to believe. She was shocked. She was absolutely shocked. Needless to say, this poor rep, I was cussing, swearing, shooting him up one side and down the other. I was supposed to get a phone call yesterday on Tuesday from his manager that would make this right. Do you think I heard anything? Do you think I even got an email, a phone call, voice message? Nope, not at all. To his credit, the guy said, well, what do you charge? And I said, well, I charge 2.5%. But I do something for you in a down market. My 2.5%, I'm collar trading. I'm making up some of the downward movement, maybe 2/3 to 3/4, and I'm converting them to new shares. I'm not sitting in a fund where I've lied to my clientele about what the real charges are. I'm not sitting in a fund saying, oh, it's not my fault, it's the market's fault that it's down. I'm actively doing something to make up that downward movement so I can take profits off of those long puts and add more shares into your account. And yes, Lance, your wife wants to hear this. I am dollar cost averaging without asking you to go put more money into your account. You want to talk about transparency? Plain and simple, guys. These big boxes that have all these millions of buildings and millions of employees, really, you think they can get by on 0.04% charge? Really? And that's a percentage basis. That's like 4/1000ths. 4/10 of 1 penny is what they're charging you. And they can get by with all those big buildings and their multi-billion-dollar salaries and bogus crap like that? Tuh, you gotta be kidding me. This poor rep was ashamed. You could just hear it in his voice. I'm gonna have to have you talk to a manager. There's nothing to say. In all honesty, the big boxes, the Vanguards, TD Rowe Price, all these big funds, they're asset gatherers. They're not there to protect your money. They stick it in diversification. We learned in 2008, everything goes down. We're learning in 2020, no real safety in the metals. Yes, gold has gone up, but everything else has not. Oil, energy, oh my gosh, huge losses. We understand that it's scary to buy into a falling market. In fact, most people are like, oh my gosh, Kevin, I don't know how you ever buy low. It's neat because that collar trade having protection, that protection expires. It's not for forever. There comes a time when you have to take your profits on that insurance on your stock. When you do so, usually the stock has gone down significantly, in which case the collar trade forces you to buy back in. Lance, if you can have your wife just do a Google search, Hurley Investments and intro, there's a 16-minute video that goes over collar trading. I think I use a J.C. Penney example on how we can buy protection on the way down and pick up more shares. I asked if you're paralyzed by 24 million, it's actually 26 million people losing their job. I am. It bothers me. In fact, in all honesty, some of the things that really worry me about our stock market are the huge job losses and how quickly those people will get it back. Or if it's going to be better for them to stay on unemployment for a year and a half, making, in Utah, it's $1,060 a week, $460 a week from the state, $600 added on top of that by the Fed. That $600 by the Fed is tax-free. I'm also reading in the state of Utah that through the next 6 to 18 months, any unemployment is tax-free. You won't pay tax on it for the state of Utah. Every 4 weeks, someone can collect $4,240 tax-free without having to work. It's like having a $5,200 to $5,500 a month salary. Will people return to the workforce? Some states might go bankrupt. That freaks me out. I'm glad that the NASDAQ has been in an uptrend through most of this, but other indexes aren't. I'm not sure what social distancing will do to restaurants, to movie theaters, to areas where we congregate, areas that create revenue in the United States. And obviously, no one likes to see a portfolio lose 35 to 40%. These are all reasons to do something different than sit in a fund and think diversification is going to protect you. I ask people, are you using patience and prudence in your personal investing? Most people have no idea what that is. Most people don't even know if they're in a mutual fund with, pardon my French here, but with a shitload of extra fees and charges thrown in there. 0.04% on a Vanguard best performing fund, which it misses the S&P by 2%, and its real fees are 4.40%. Man, that's just ridiculous, people. Most funds are in that 4.5 to 7.5% range. You're getting robbed blind. Are there times you should always stick with collar trading? Well, of course not. It's foolish. If you always have protection on your stock ownership, With all due respect, you don't understand trading. You don't understand technical analysis. You're putting bearish positions on a bullish moving stock. You are giving away your profits by overprotecting and spending too much money for protection. But Kevin, I can go out in time. I can pay for like 3 earnings with a leap short call. I get it. It's been an amazing strategy the last 3 to 4 months. But the previous 12 years, it's killed you. You've just wasted the best bull run market ever. Guys, earnings is coming up. We're going to have a lot of earnings this week. That's going to move our market. I'm not going to go through all of them, but plain and simple, for us, Ford and Starbucks reports on Tuesday. That'll be with Google, UPS, Southwest Airlines. We're going to have D.H. Horton, the home builders, which probably aren't going to do good. British Petroleum with oil is going to be down, won't be good. Caterpillar won't be good. There's no one working. Carnival Cruise Lines on Wednesday. Humana, MasterCard. MasterCard should probably do pretty good. I think credit cards are recession proof. You'll see MasterCard go through. Valero is energy. It probably won't do good. eBay will probably do good. I don't know about Microsoft. Tesla, I think, will probably go down because it hasn't had factories open. Boeing. Boeing's been beat to hell. That's one of the stocks we trade. It'll probably have an up day only because it's been beaten up so badly. Facebook will be an interesting one. Look for Google to give you an idea what is going to happen on Facebook. If Google's up because of their earnings, then you're going to see Facebook up. Thursday, Kraft, McDonald's, I mean, El Pollo Loco, these prices are going to get hammered. Gilead got hammered from a test that they did for a vaccine that didn't go over very well. I'm not sure if the tests were completely done, so it could have better results coming up, though. U.S. Steel is going to get hammered. United Airlines will probably get hammered. Visa and Apple. I think Visa will do very well. Again, it's a recession-proof stock. When people are out of work, they go to their credit cards. They charge up their credit cards. Last month, consumer credit was up by 50% more than the highest expectation. We're looking at like $15.1 billion in credit, and the credit for consumers came in at $22 billion. Apple, I think Apple has more money than it's in the top 7 countries of the world for cash they have on hand. Apple can weather the storm, even though it probably has the most. There's no way they sold 43 to 55 million iPhones. It's impossible. They didn't have any to sell, but they have enough cash to weather the storm. Apple might be a really good stock to be in this week. Clorox should do really good on Friday. Eli Lilly, retail's going to suck. JCPenney is going to suck. ExxonMobil and Chevron are also probably going to be hating it. The fact that we have so much energy and oil and nowhere to put it is just unbelievable. If you ask me where our markets are going to head this week, I think overall, because of Monday and Tuesday, we're probably going to go higher. I'll be worried about getting above the 200-day. Probably not going to happen, but we broke the 50, so we're probably going to have a run up to the 200-day. Interesting to see if we can get back 26,000 on the Dow. Likewise, we'll see the same thing on the S&P. Get it back up to 3,000 on the S&P. And the Nasdaq's been trucking along. Almost 9,000, 89.69 will be an interesting pivot point, but we have ourselves back above the 50 and the 200-day. The Nasdaq is outpacing the S&P and the Dow Jones this year. Wednesday GDP numbers, they're probably going to be much worse than we think. Negative 4.3, it'll probably be up to 5 if not more. Interesting to see on the close on Wednesday what the FOMC rate decision is. Personal income, personal spending on Thursday will move the markets. What else can I tell you? Protection. I'm just protecting my stocks. I've got long puts on everything. There's no forgiveness right now in our stock market. If you miss top and bottom line, or even if you hit the earnings per share and the revenue numbers, but you pull your guidance, which you should, there's no, let's face it, there is no real model that dictates what companies are going to make in the next 3 to 6 months or the next year and a half. But companies are being punished for it. You have to have some protection on your positions. I have a very interesting article on predicting the future. This is related to gas. In all honesty, it was Interactive Brokers that mentioned like a $660 million loss just on the commodity trading on gas. And unfortunately, they let everyone know that that was an $88 million margin call, which means people's portfolios lost half their value and were only worth 88 million. It's really $196 million evaporated last month alone in retail trading accounts because they got margin called and they shut down the portfolio for zero. What was supposed to be zero. Actually, they couldn't shut it down quick enough. And I think they said they were going to pick up either a 16 million or a 6 million loss because they couldn't margin call and shut down retail traders' accounts quick enough, which leaves Interactive Brokers on the hold for this discrepancy. It was a horrible month for oil. It probably is not going to really get better. In fact, oil truly doesn't have a catalyst for the next 2 to 3 years. A very interesting article. Please read through it. It's an awesome article on oil and where it's going to go to. Boeing's coming up this morning. More clouds like I had for Boeing as a customer. This is one of my companies that I think is ridiculously cheap. I would suggest looking into Boeing if you can get into it long term. But here's a great article on some of the bumps that you're going to have in the near future. Going through why oil prices went negative and can they go negative again? I'm just trying to get a bunch of information in your hands regards to that. QE forever. It'll be interesting to hear today as the Fed has their, 215 statement. They're obviously probably not going to change any more rates. What am I trying to say here? They're not going to lower rates, but they can do some other things, which will be interesting to see. Please read through this to see what they can do. Making sense of the stock market just off 16% from its highs. Really great article on our next 6 to 18 months down the road. It's going to be a doozy. There are some winners in the stock market. There are some losers. And last but not least, guys, be safe out there. Right now, the coronavirus, yes, I don't think it's as serious as people think. I think it is just an overreaction to the flu. Yes, we have 1 million people that are infected, but we have many more when our flu season comes through, which is really October through now. We have more deaths usually on the flu season. Now, it's not as serious as the coronavirus. You drown in your mucus. You don't crystallize your lungs, which is awful. But please be safe. Please do everything you can to social distance and to not put yourself in a position that you can pick up this virus. Guys, I'm going to get this out as quick as possible. I appreciate your time. I hope this was helpful to understand real cost basis from these big boxes with funds that you think are so cheap. They're not that cheap. You can't afford the buildings, the amount of money that they spend and pay their upper ups. Then it's asinine to believe that you're getting a cheap mutual fund. It's always 4.5 to 7. Sometimes they're 9 to 13% fees. You just have to dig through their paperwork to find the real cost. Guys, have a wonderful day. I appreciate your time. Look forward to seeing you on Thursday morning for our trade findings and adjustments. Take care, and I'll see you tomorrow. Bye-bye.